Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. Just remember the disclaimer nothing should be construed as financial investment advice. Uh, these are just my opinions, thoughts on the market. You can read the disclaimers below. And if you are going to invest, consult a financial advisor. So let's get going. Today's stuff, big updates today. I literally saw like an Instagram reel on this and didn't know it was real, but they said per CNBC. So a little housing bubble update. If you listen to this channel, you know it's not a surprise, but home prices go negative for the first time in over 2 years and may stay that way for a while. So interesting stuff. Home prices are down 1.4% in the last 3 months. Active listings in November, 13% higher than last year, but new listings 1.7% higher. Mortgages, yeah, whatever. Mortgages are not the reason prices are coming down. So here, home prices finally come down compared to last year, just fractionally, according to daily reads, which looks high frequency listing data on single family homes, condos, and townhomes. Now, I've been reading that the condos are a bloodbath. So, so on a national level, home prices have not gone negative since mid 2023. After the Federal Reserve brought rates up from zero, mortgage rates moved simply higher. So, so there it is. I mean, this is you're seeing prices go down now after this big run up. But I will tell you this, I don't think this is I think this is more the beginning, not the end. And if you look at it, inventory is still historically low. So so right now certain markets are seeing more significant drops. Austin, Texas, Denver, parcel lot, Florida, and Houston, Atlanta, and Phoenix. And I mean, I think these gains are going to go away and we're going to see much, but right now we have gains in Cleveland, Chicago, New York City, Philadelphia, Pittsburgh, and Boston. But I think those will go away. I don't think those are not. Uh, and they said, oh, the one that's down, this one measures both new and existing. And I talked about this. Other home price indexes surveys measure just existing. This measures both new and existing. So look at this demand side weakness. And you're going to see a lot more of that. So So there you go. Small prices, but I think this is the beginning and eventually it's going to crack even more. So there it is. And the affordability is not coming down. So look at the stock market this week. Dow Jones today, I was down 245, S&P 73, NASDAQ 398. And if you look at it, tech has done the worst today. And I think that's mainly because even though they did interest rate cuts, which was like, I think 25 or let me see. Sorry, I should have been more prepared. Interest rate. Let's see. Third cut, and then it says sees a slower pace. Uh, one more reduction in 2026 and another in 2027, which these dot plots are always wrong. Look at this. Analysis resume buying treasuries. They're buying 40 billion beginning Friday. I don't know what the hawkish cut. Yeah, right. They're buying 40. So I think this is 25 basis points. So I think they're going to go a lot more. I don't think and this is despite, and I think the reason the stock market isn't doing all that well is they didn't get the dovish cut that they need. And they're not going to get one until, I mean, Powell's out of office. I think Trump's going to fire or he's going to resign, and that will be it. And that's why I think you see the stock market right here, the Dow. And let's just go to this. Speaking of the stock market, uh, look at this Dow, S&P, and Nasdaq sync cap brutal week for tech stocks. So, yeah, I mean the Mag 7 was the market. So if that goes, so does the market. So Nasdaq down 1.6, S&P down 1%. Dow bucked the trend, rising 1% for the week. And yeah, it's not I think if the S&P and the Nasdaq, the Dow's going to follow. And look at this, Treasury yields rose 4.18%, 30-year rising 4.85. I think long-term interest rates will keep going higher. Um, and this is interesting. They're switching out of text fears about AI over valuations as Broadcom followed Oracle, delivering earnings, Wall Street wanting more. Chipmaker failed to deliver clarity on AI payoff. So if you look at this, the AI bubble, all these, they're starting to come to roost. And I thought this was interesting how AI has changed immediately. Look at this. This is CNBC. It's not Zero Hedge. It's not some conspiratorial. Red Hot Texas is getting so many data center requests that experts see a bubble. I like Zero Hedge, so I just don't want people to think I think it's conspiratorial. I mean, is it bearish or is it more bearish than it should be? Probably, but what about the mainstream media? I don't think you can be such thing as too bearish because the mainstream media is always so bullish. You need a counter. That's why it's good to read both, I think, in my opinion. So many data centers request a flood of Texas that demand is impossible to meet. Speculative projects are clogging the pipeline to connect states. You can tell that is investors will be left on the hook if too much infrastructure is built. So if you look at that, this has bubble written all over it. Cheap land and cheap energy. Of course, that will not be cheap anymore once data centers get their claws in it. It definitely looks, smells, feels, and is acting like a bubble. Research scientist at University of Texas. So top line numbers. This is what I said. Top line numbers are almost laughable. So yeah, you can tell it's becoming sentiment is changing in terms of this data center. So let's get into gold. What a week. Well, we'll get into first. Felt as in Goldman Sachs sees significant upside to its 2026. Let's get this. Gold price target of 4,900. So significant upside to year end of 4. I agree with Goldman Sachs. 4,900. I think this will go 20% nearly adoption. So Wall Street, they do love gold. Wall Street. I don't think this is the top. I've sold silver, but I've sold precious metals. But I'll tell you this: I just sell at. You want to reduce your exposure as you get up. So if you miss the top, and let's say I've seen silver go from 48 to $12 in my lifetime. I've seen gold go from almost 2000, let's say 1921 all the way back down to $1,000 in my lifetime. And with silver, it based there from 2013, meaning the bear market, all the way basically to 2022. And then people did not break even for 10, let's see, 10, 11 years. And with gold, it based at 1920 and it broke down in 2013 where people were underwater and it went all the way to you didn't really get those 2000. I wouldn't even say 2011. 2011 is when it was reached in 1921 and then it got below 1900s and it stayed below there from 2011 all the way up till 2020. You had to wait 8, 9 years to break even in gold. So some people wish they were just selling as they move towards the top. So that's what I do. Not investment advice, just what I do. So Goldman Sachs, 4,900. Look at this. Gold can hit 5,000, but don't expect to see another gain in 65% in 2026. If you look at me, this doesn't look like a bubble. A bubble means gold could hit 5,000 and beyond. Gold 65 gain might be nothing. And this is on Kiko, a gold website. So that's why I don't. Bhattacharya. I don't know how to pronounce the first name. I actually know a lot of people with this last name. That's why I can pronounce it so well. Bhattacharya. I'm not going to say who or their full names. This is actually a very common Indian name, Bhattacharya. So, so yeah, I'm not giving away. I'm not going to say first names or anything, because I know a lot of those people well. Bhattacharya. So whoever this is, I don't know this person. So yeah, I don't know, but if you look at this, I didn't really read the article, but Niels Christensen, I guess. But yeah, I don't think this, I don't, doesn't mean I don't think it's going to top soon. I expect it to top in 2026 or 2027, but doesn't mean I'm right. Not financial investment advice, just my opinion. Uh, But yeah, so this is why sentiment I just don't see. It's going to gold if you look at it today. Despite it really going down, silver was down, that's 61.99. 4,300, that's ask bid. So if you're selling it to a dealer, it's probably 4,298 or 61.87 is more what you're gonna get. And look at that. Platinum is doing really well. I was always a fan. I was buying platinum jewelry around $1,000. Uh, let's look at the gold for the five. Let's go to a 5 day. 1 minute, 30 minutes. What, seriously? They really, what, I'm not, oh, there it is, 5 day. You look at it, gold's had a really good week. It started out 4194 and came down, but came back up. It's at 4,300. This is just a 5 day chart. So doing very well. I think the interest rate, gold's a big winner from the interest rate cuts. Let's go to silver. Let's do the 5 day. Look at silver doing it's around 58. Now it's at 61. Really good. And if you look at it, the interest rate cuts, it's really benefited. It's profit, but bought again. And actually, I'm not a chartist, but if you look at it, this sort of looks like a trend up here. It's forming it did come down today, but was bought. So just, I wish I had Because this could have been a breaking, but it could have been forming a new trend. So we'll see. But yeah, silver, I mean, I've been selling into strength. Uh, Finally, I sold some silver today. Yeah, that junk silver I couldn't get bought. Old coworker of mine who started his own business. Actually, his business is doing incredibly well too. It's one of the biggest in the country now. I'm just going by. I was texting him. Uh, so build it all from scratch. Build it during the bear market. Got mad respect. I don't want to bring on any unwanted publicity to his business. I don't know what my channel would bring or not, so I'm not gonna mention it. But mad respect. It's good to see old coworkers doing well. I had taken my problems off my hands. I went to the local coin shop, which I really love. They give great prices to local coin shop. Uh, Local coin shop, but they told me the refineries they weren't buying. They said, yeah, we take your stuff and we just sell it right to the refineries. And then they told me they're like, yeah, the refineries won't take 90% anymore. So talked to I asked my old coworker, and I was like, do you all still buy 90? He's like, I'll buy your 90. He's like, yeah, don't worry. He's like, come on by, I'll take care of you. And so it's cool, but his is a lot bigger than the local coin shop. So I'll probably be selling to both as I get. I mean, the local coin shop, I actually really like them. They're a small business. They were recently founded during the bear market too. Uh, so I mean, my heart goes to the North. But my old coworker, yeah, don't worry, I'm not. I'm just rambling now. But yeah, gold, I think still going up. I think it's gonna. It could base. It might not even be a correction. Like the funny thing is, everyone talks about, oh, it's gonna go down, a correction. It just might. It might not correct in terms of price. It might just correct in time, meaning it might correct again. As Jordan Royburn said, it's critically undergone, so it just might go sideways from here. If you look at gold, it's really basing over 4,000. And that's why I think it's making another move where it's the 5,000, close to 5,000 or even more. And I mean, I'm not a technician. I'm not gonna like if you let's look at silver, let's see year to date. If you look at it this year comes up, goes up, it was at 54, came down and then came back and like if you look at that, that's sort of like a little cup and handle. I could be wrong, but is that like look at this? Maybe Jordan will have to ask, but it looks like and then it just comes up. And so that's why I am not surprised. Look at that year to date, 6 months, look at that cup, and then it could be a handle, and then it just goes up, and then it. This is why I'm not all that cup handle. Is that 5 year? Well, there's no cup and handle here. I'm not even pretend that more looks more parabolic. Look at there, that's wow. This is another reason I'm selling into strength. Look at this. This is a chart that scares me. But if you look at it, it's all let's go back to gold. Let's go back to gold. Do year to date, and if you look at it, it just comes back, corrects a little, and then comes right back. And then if you look at this, it just went from May of this year all the way up till September. It just corrected in time. It didn't really correct in price. Went down, up, down, and it came back. And then it just made a move up. And if you look at it, sort of, it could be correcting just in time. And it might not, because everyone expects these painful corrections because of the last bear market. But if you look at it, let's do 1 year. If you look at it, same here, just correct through time, then it goes down, corrects, and then I think it will correct through time again. If you actually look at that, it looks like it broke out of a triangle. That's why I think it's, and even here, 5 year, just through time went up, through time, and I mean, if I'm not a chartist, I'm not a technician, I'm not, yeah, so I'm not the person to really ask. But shoot, did I not share? Did I not share? No, I did not share at all. Oh my gosh, I did not share. So anyway, this is the gold chart. Just so you can see it corrects through time. Let me just go to the silver price. I'll just show you the cup and handles again. Sorry, it's been a long day of errands and selling stuff. Just look at this year to date. You see a cup, a little handle, it goes up. So here you go. Sorry about that. Cup, little handle goes up 1 year. And then 5 year, and then if you just look at all, that's the parabolic right there. So anyway, obviously that means I gotta get. Just remember, not financial investment advice, just my opinions, thoughts on the market. If you are going to invest, consult a financial advisor. I will see you next video.